Okay, everybody, it's me, Gregory Mannarino. It is still Monday, November 28th, 2022, post-market wrap-up. You know when I say all the time that you can't make any of this stuff up? Well, today's one of those days. So the narrative here, clearly, over freaking whelmingly, has been peak inflation. It's peaking. And like I said, this morning, Bloomberg was saying, oh, it peaked in June. Well, Christine Lagarde, whatever it is, came out today saying, guess what? Got a big surprise for all of you. Inflation is not peaking. Duh. Can I please get a duh? Duh. People, really honestly, you can't make it up. It's impossible to do, but that's where we stand here, and it gets better than that. Let's start off with the market here. Stocks fell across the board 1.5% respectively for the major indices, roughly 500 points for the Dow. Okay, lovely, freaking whatever. Did you watch the dollar from being lower to the knee-jerk higher on fear? A bunch of fear factors playing in here. We heard from Fed President Williams. We're going to talk about him. And from Bullard, bullshitter, whatever, him too. And the market really didn't like what they said. No. Also, this whatever they're throwing at us right now, look over at China. Look at China. It's China right now. China, unrest, China. When they do this, people, there's something else going on. I'm trying to find out because it's always the same story. Find a distraction mechanism. Get everyone to look over here, true or not, while they can pull off some other crap in the background. It's the same MO over and over again. So on the back of stocks falling, on the back of the stronger dollar today, 10-year yield relatively stable, okay, not too much. MMRI, relatively stable today, still stuck in a high zone, mid 200s, 244 the last time I looked at it. We know where the red line is, people. You and I have been shown where the red line in the sand is, and that's at 300. MMRI 300. You remember Nick the Pig, Oink Man? And you remember Mary Dolly, the gender confused one, has no idea. She flips a coin in the morning, decides what she wants to do, it wants to do. Yeah. Between those two, they managed to tell us clearly where that red line in the sand is. Because of the reversal in the dollar today, gold and silver fell under pressure, especially silver. You got cryptocurrencies under pressure as well. Crude oil ended up putting on a little bit of a gain here. But the reason today why this market got a little spooked and the knee-jerk higher into the dollar here was because of comments out of, maybe Lagarde too. Lagarde coming out, Christine Lagarde, explaining that, no, I'm sorry, but inflation hasn't peaked yet. And, it's insane to me to ponder the fact that you have Lagarde, and Jay Powell over here tag teaming the market, up the wazoo, raising rates, telling you everything is going to be fine, but inflation continues to rise. Now, on the back of that, yes, two Fed presidents today. Fed President Williams wants you to know a couple of things here. And this is what he said. It's unbelievable. He's expecting unemployment to rise, but he expects that inflation may, notice the key word here, may start to slow down moving forward. That's his big guess. Now, read between the lines. He's not saying inflation is going to stop. He's saying inflation is going to continue, but at a slower pace. Can I please get a duh here? Look, this is going to continue and go on and on and on. It's not going to stop. And then we got the other freak today, Bullard. Now, this is what he had to say, and this also spooked the market. Bullard, expect economic growth to slow through 2023. How about we have no economic growth? We already found out that our economy is basically in free fall, but every number they want to throw at you is completely over. But he thinks it's going to slow from there. I mean, we're going to go in reverse is basically what he's trying to say. And he's also saying here that the Federal Reserve needs to keep rates higher for longer because inflation continues to rise. Oh, 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 really? Well, I'm glad you made that clear, sir. I mean, come on, people. You can't make this stuff up. It's unfreaking believable. Let's see what else this freak had to say. Look, whatever they have to say is all obviously just a means of deception, distraction, and it doesn't make any sense because they don't make any sense. These entities exist to keep people off balance, not understanding what's really going on. They're going to fling out whatever they got to fling, like loads of shit being flung at a wall, and to see what sticks here and there. Meanwhile, there's no accountability whatsoever. What happened to temporary? What happened to transitory? Every single one of them, and they were all wrong. All of them, really? How about you and me knew from day one? Day one, this would not be transitory or temporary. Janet Yellen, another one here. Where's the accountability? How about nowhere? That alone should tell you something. I mean, you really can't make this stuff up. Now, I want to touch on a couple of other things here. Man, I have a lot of stuff here. If you recall, maybe a month ago or so, 6-8 weeks so, whatever, I had mentioned a couple of things going on here with the banks. Now, the banks, I don't want to say the banks are in trouble because they're not. It's you and me who are in trouble. People are not saving. Okay, the savings rate is in the negative. So the banks obviously are not accumulating any savings from savers because people are getting wiped the freak out. So no savings, no loans, and no deals. So what that should tell you is the financial sector, can I please get a duh, which is completely insolvent. I mean, all of these institutions operate off of a fractional reserve system. And whatever happens here, believe me, and I think we already got, a lesson, at least I hope we learned a lesson from the last time, the banks will not lose. They will suck you and me completely dry, and they'll be allowed to do so via our politicians, all of them. I don't care who they put behind the Resolute desk, will go right along with this and suck your skull just to freaking reliquefy the banks, create more inflation. Because look, that's where we're going. If you notice the narrative here, again, it's inflation is peaking, meaning it's going to start to go down. Then we got Lagarde saying no. You and I didn't need Lagarde to tell us no because we already have we're in touch with reality, you and me. I would have to say we are, absolutely. And the end game here and the goal of central banks is to do what? What am I going to tell you? To continue to inflate. They're going to continue to inflate the money supply faster, the global money supply faster than you can possibly imagine here. And out of the other side of their mouth, they're going to get freaks like Williams and whatever, turd face, and then bullshitter Bullard over here to explain to you that the Fed's going to keep raising rates. And that's really going to make a difference this time because they keep doing the same thing over and over again, and it's not making any damn difference. It's the same story. Inflation is continuing to rise. It's got nowhere to go but much higher. Now, I want to touch on something else here. I know this is kind of long, this video, but just bear with me here. I want you to have this, all right? If you are a subscriber to my free newsletter, this is already in your inbox. If you are not a subscriber to my free newsletter, please subscribe. Make a copy of this for yourself. Some things I write are important, and this is one of them. So I want to go over this with you, and I want to cover it as well. And I want you to share this stuff. All right, so here we go. Look, we heard from J.P. Morgan clearly saying that people need to be buying gold and silver here. I mean, can I please get a duh? Yes, we understand that we need to bet against the debt, become our own central bank. And eventually we're going to get, read this title. Can you read that? A commodity super spike is coming. Are you ready? Now I want to outline how this is going to play out here, okay? So again, a commodity super spike is coming. Are you ready for it by me? All right. While it is certainly no secret, okay, that today the cost of living is continuing to increase at an alarming pace, what lies just around the corner is much more menacing. I like that word. And there is no way to stop it. Not only is there no way to stop it here, okay, it's being fueled by central banks who are going to continue to balloon the global money supply. Economics 101, people. The bigger they balloon the global money supply, the more purchasing power gets sucked out of it. And all of these bills, in whatever form they exist, go chasing the same amount or lesser amount of goods. Inflation pops. And that's just the opening act. When this meltdown in the debt market occurs, and it will, that's when all hell is going to break loose. Now, first, understanding market environments. Pay a little attention here. Cash moves through the global markets in more or less predictable patterns. To better understand this phenomenon, follow along with me just for a moment. There are only two kinds of market environments. The first one is called a risk-on environment, and the second one is called a risk-off environment. If you have followed this blog, you're very familiar with this. In a risk-on environment, cash flows into risk assets like stocks, and if history is any guide, also real estate. A risk-on environment is created, pay attention, when central banks artificially suppress rates. When they artificially suppress rates, creates a risk-on environment. By a central bank keeping bond yields artificially low, it opens a window which causes assets like stocks and real estate to inflate dramatically in price. It also causes cash to move out of commodities. I want you to keep that in mind. When any central bank, either by itself or collectively with other central banks, buy debt, they also inflate the global money supply. Can I please get a duh? Thank you. And the effect is always the same, a loss of purchasing power for their respective currencies. Another duh, please. And a gigantic price action distortion occurs across the spectrum. In any so-called free market, very important point here, there has to be a real price discovery mechanism in place. We're clear on that? All right. That is, it must be the market itself by which the normal buying and selling of assets on the open market dictate price. That makes sense to you? I hope so. But when you have central banks manipulating the price of debt by buying in mass, okay, any real price discovery mechanism is effectively removed. All right. When a real price discovery mechanism is removed, you get price action distortions, which are also known, are you ready? They're also known as bubbles. I know you know that word, bubbles. Okay. Asset bubbles are generally thought of as an exaggerated increase of an asset's price, like housing or a stock market bubble. However, you can also have inverse bubbles. An inverse bubble exists when an asset's price is exaggerated to the downside. An inverse bubble is created when price action distortions become extreme to the downside. Am I clear on that? As would be seen in an environment where central banks are buying massive amounts of debt in order to keep rates suppressed, like they're doing now, and they've been doing now since the last meltdown. Interest rate suppression creates risk-on environments while also creating inverse bubbles. You got it? Underline this stuff. It's true. It's great. This is gold. The second kind of market is called a risk-off market or environment. In a risk-off environment, cash rapidly bleeds out of assets like stocks and real estate and eventually makes its way into commodities. In a risk-off market is preceded, okay, by a rapid sell-off in global debt markets, which causes bond yields to spike in an uncontrolled manner. You all know this if you've been following this blog. And this, in turn, puts enormous pressure on risk-on assets. Make sense? Okay, let us move on. I'm almost done. In a full-on, rapid risk-off situation, cash swiftly flows out of debt and stock simultaneously and simply moves, you know my theory here, moves into assets which have become grossly undervalued during the risk-on cycle. And that would be commodities. Today, commodities in general are in massive inverse bubbles. Therefore, when risk-on eventually becomes risk-off, and it will, the price of commodities will super spike. This really should be part of your arsenal on your knowledge of how things are playing out, what you're seeing right now, and eventually how they're going to play out. So I want you to have this, okay? It's in your inbox if you subscribe to my free newsletter. If you do not, what the hell are you waiting for? There's so much good stuff out there, and it's really free, and I do not share your information with anyone. All right, with that said, people, I covered a lot here, very important stuff. I want to hear from you. And for those of you that do have this, I want to hear your comments on that as well. People are already commenting on that piece in my newsletter comment section. All right, people, look, this guy here loves you a lot. I mean that from the heart. Pay attention to what's going on around you. Really focus like a freaking laser, because things are changing rapidly and you're being deceived. You're being decepted. Is that a word? Well, maybe. The deceptions here are off the Richter scale. Nothing is what it seems to be. So you got to pay attention to what's going on, all right? This guy here, again, loves you a lot. Comment, share the video, get your piece, this thing, all right? And I'll see you, whatever that is. I'm losing my mind. I'll see you in the morning.